Good morning, I'm Peter Milios from the Finance News Network. Early trading in the US on Friday saw oil spike more than 3% and Middle East tensions take centre stage until the limited nature of Israel's retaliation against Iran became apparent, easing concerns of any further escalation in the region and calming markets. The Nasdaq was the worst performing index, closing down 2.05%, while the S&P 500 slipped 0.88%. Both indexes fell for a sixth straight trading day. The Dow Jones was the only one of the major indexes to close in positive territory, finishing up 0.56%. In company news, Netflix fell more than 9%, even after quarterly earnings beat on top and bottom lines. Subscriber numbers jumped 16% year on year. The streamer also said it would no longer report paid memberships starting in 2025. Nvidia collapsed 10% and Supermicro plunged more than 23%. Those moves come as the S&P 500 posted its worst weekly performance since March 2023 amid growing fears around the path of inflation and monetary policy. With a loss of more than 3%, it was also the large cap benchmark's third straight negative week. A chunk of that downward pressure came from the tech stocks, as the sector was the worst performing in the S&P 500 in both the day and the week. The tech sector fell over 3% on the day on Friday. The best performing sector was utilities, which closed up 1.44%. The S&P 500 is now more than 5% off its 52-week high, part of a market pullback that has been largely driven by tempered expectations for rate cuts amid sticky prices. Economists and strategists now see the Federal Reserve waiting until at least September to lower the cost of borrowing money. The Nasdaq Composite fell 5.5% last week. The tech-heavy index posted its fourth straight down week, its longest negative streak since December 2022. It also marked the Nasdaq's worst weekly performance since November 2022. With Friday's advance, the Dow eked out a gain of 0.01% for last week. That was its first positive week of its last three. Turning to the Australian landscape now. Australia's upcoming quarterly consumer price report is expected to show a drop in annual inflation to 3.4%, slightly below the Reserve Bank's forecast of 3.5%. Despite this, the figures are unlikely to sway the central bank's policy decisions. The SPI futures are pointing to a fall of 0.6%. Thank you for listening.